Okay, welcome everyone to the Two Words podcast. Actually, Dan, do you want to do the introduction this time?
Absolutely. Hello, everybody. Welcome to the Two Words podcast. For those who know, Juan and I live in London. We're just two guys who love to talk about economics, finance, technology. Juan has a background in engineering and now works as a consultant, a strategy consultant in London. He tends to be all over the place, but this time in this week's episode, he is back after having gotten back a few hours ago from Spain, and I work in
Literally come
a
from
big
the airport.
exactly. And I work in consumer goods with a background in finance. And yeah, we love to talk on a variety of things, usually the hot topics of the weeks, but also just generally anything that interests us and we think would be interesting to our listeners.
You know what, Dan? I think I've mentioned this before, but when we started, I said, this is very difficult. Starting a podcast where we talk about what's happened every week. Surely, if we release an episode every week, there will be weeks that will be just super quiet and where nothing happens. I actually, this is something that I thought about some years ago when I used to watch the TV, and I was thinking about the news. Really, I was like, well, what if someday nothing happens? It's like an episode of Black Mirror. Um, but the reality is that just hasn't happened yet. And it just seems like every week there's plenty to talk about. And this week is just one of those weeks again where there's so much to talk about. So for anyone wondering, we're filming this on so late on Monday night, and we're just in the midst of a huge market sell-off. I mean, Bitcoin prices crashing, the S&P 500 is down, Apple is down like 5, 6, 7%. I don't even know how much. So we'll talk about all of that. But yeah, maybe Dan, you can give us. You're the finance wizard out of the two, so you can give us a bit of your take on what's happening with the market.
Yeah, absolutely, Juan. So, generally speaking, we're seeing sell-offs across asset classes as a whole, especially with strong ties in the US. So, one of those things, what that tends to mean is that there is a general lack of confidence in the economy, and in particular, in this case, the US economy. And we've been seeing that as a result of a variety of political reasons. One of the main ones being tariffs, but also just that there's more, subtle conversations and aspects such as the overall belief in the current, president and his campaign and his teams behind the wheel. But one of the big concerns effectively is these harsh tariffs and the increasing trade tensions and how this actually might be leading to inflation, increasing consumer prices, retaliation from a lot of countries. And what Trump has said openly is that this will mean that there will be an element of a required sort of turnaround and repositioning and reshifting. And in economics, whenever somebody says anything like that, an economist would say something along the lines of, that means you're going to have a recession. So basically, kind of distributing the power plays, organizing things in a better way. What that tends to happen, and we saw when he originally set the tariffs earlier last year, was that the currencies of its trading partners of the US devalued quite significantly, which led to a huge amount of inflation in those countries, which led to a huge amount of pricing and a massive basic effect, a snowball effect of increasing in prices and costs for the US economy, for their supply chains. And we're expecting something similar. is what the general markets are expecting, meaning that things are going to get more expensive. There's going to be a just general economic slowdown, and a lot of things are being put on hold. If we're looking at the growth in like Nvidia stocks and things like that, people are generally sort of very risk averse right now, and we're seeing huge amounts of sell-offs as a result, and people buying in other economies. You know, defense industry has skyrocketed in Europe as a result because of this, where people are concerned that this might actually lead to some sort of conflict as a whole, um, and the
Yeah,
increase in demand. Yeah, there.
yeah, I've seen, well, I've actually seen and heard all of the euphemisms for recession that there are. I've heard everything from the market is going to go through a detox, the economy is going to go rebound. So all of these terms, which in the end, really what they're what people are meaning with those terms are essentially, doesn't necessarily have to be a recession, but certainly a slowdown of the economy. We were just used to the economy and the S&P and just the market in general, just being up and up and up, and it just seems like the moment that you have a bit of a rebound, it seems like it's the end of the world. But actually, this time it may be different. And so let me give you my take. We are living through a real life experiment right now. And it's the experiment of it's shifting taxation closer to consumption rather than income, right? So when you add taxes or tariffs, what you do is you increase the prices of goods sold, and that essentially creates inflation for your economy, and your population notices that every time that they want to buy something, because it's going to have an import duty on it, and so it is going to be inflated, which in the end it's some sort of shifting taxation closer to consumption. And what the Trump administration wants to do is to reduce actually taxation on income. So it wants to reduce all things income tax. Now, maybe we want to talk about the reversal that went on with the tariffs on Mexico and Canada that also happened this week. There were going to be 25% tariffs on Mexico and Canada, and then Trump just reversed those in the span of a week, I think. I'm not sure if you have any thoughts about that.
Yeah, I think first of all, in terms of the whole income tax discussion, it's an interesting one because right, so historically we've built this idea of generally everybody paying a sort of income tax, and depending on how much you actually earn, that you pay a higher proportion to support the society, because that's supposed to reflect your higher consumer spending, right? If you earn a lot of money, you're more likely to have more cars, therefore use the roads more. Those sorts of ideas underpin it. Now we're moving to actual consumer spending in terms of, well, how much do you actually spend? I think people generally, with a lot of the economic pressures nowadays, feel a lot more pressure on how much they earn. So people taking 50, 30, whatever percent of their salary, no matter which economy they're in, is actually quite a big deal. And a lot of people, as a result, are moving to these tax havens where there is no income tax. You know, we know about UAE is a good alternative for Europeans, for example. Um, so it's understandable that it's a good experiment to try that, because it's basically a tighter grip around how much you as an individual actually consume in terms of resources, and therefore the tax you should be paying. On the flip side, will it work? Because it could lead to a massive gap in overall budgets for these governments, which might be completely overlooked. maybe that's a good thing because governments might not have like the idea of Doge might not have the strongest grip of their budgeting because their main focus is value for money and not actually like a really business model focus where you you try and get absolutely every penny working. It's more about what is the long-term benefit for of spending. So I don't know. We'll see on that one.
Actually, so it may work this time, and let me tell you why. And so this is how I see it play out. The Trump administration is putting tariffs on imports, so that increases inflation and ultimately increases the prices for your consumer. So yeah, it generates inflation for your population. Now you do that, but you have to do that at the same time as you decrease income tax, which essentially incentivizes investment and therefore consumption. So you have that coupling there. But then what you're also doing is you're incentivizing companies to build production facilities in the US, right? So that's one of the points that underlines Trump's motive for putting these tariffs is it's this notion of importing work. And then you enter sort of a strange paradox, which is, okay, so you're importing work at the same time as you're having this couple of tariffs and decreasing tax. But you're doing that with the record low unemployment of 4% in America. So you can beg the question, who is going to take all of these new jobs in theory, right? So Americans have always seen immigration, for example, as people taking their jobs. When you are a skilled worker and you want to access a visa in the US, for example, your company needs to justify that they're employing you because your skills are unique and cannot be found anywhere else in the market in the US, right? So there's a very strong protectionist view. So yeah, the question just begs the question: who is going to take that work? And then is when you start to see how Doge could play a part in this, right? Because what that will ultimately do is shift workforce from state funded to privately funded. And when I say state funded, I was having a conversation about this with a friend in Spain, and they were discussing about how it's crazy that in Spain 50% of workers are directly employed by the state. And then I just threw the question, guys, why are you talking about 50% employed directly by the state? What about everyone else that is indirectly employed by the state? It must be around 20, 30%, right? So all of the money that the government spends in subcontractors, projects for the state, yeah, anything that's state owned, right? So all of that is what they're tackling at Doge. And that ultimately will shift the workforce to the private sector, and maybe some of those people will end up having to take those jobs that are imported. Like for example, TSMC now looking to build a fab in the US. Things like that where there will be huge amounts of work. Now the question is, who's going to do all that work? And in my opinion, you still need immigration to serve all those new jobs. And that is something that the administration is going to have to fight against the more radical side of the Republican Party there, I think.
Yeah, no, that's an interesting point. I think to me, it's more complex in terms of the government's role, the relationship, right? I mean, one of the government's fundamental roles is directing the investments and the direction of the companies of the government of the country's economy as a whole in the right direction. So employing people through subcontractors, etc., and taking a large percentage of the profits or income tax to sort of create that positive feedback loop isn't necessarily a bad thing in terms of reinvestment. If you look at, for example, France does that a lot, and it works quite well for them as an economy. The UK doesn't, and it's had the opposite effect. In the US case, where it's a very free market, capitalistic infrastructure and mindset, it's great to remove some of those barriers, great to remove some of those regulations. But actually, having those governmental pushes towards AI and tech and, strong tertiary education systems and subcontractors around that area or military to support the overall security of the country and the technology infrastructure they have are not, to me, bad things. I think something interesting in terms of, I agree, it's a very good question, is who are going to take these jobs during if you are only at 4% unemployment. The reality is having unemployment of not 0% is actually beneficial if you look at economics, because at the end of the day, if you take 100 random people on the street, you're not going to want to have those 100 random people working for you. You'd probably maybe want maximum 95, because and therefore there's a natural element of, if you look at the papers, that actually sort of improves productivity as a whole in terms of having some unemployment. But also, it puts into question, how is it possible that 96% of the population in the US is employed? It, like you said, right, it must be that there's some inefficiencies, that people are being employed for the sake of employment. But also, there are always questions, and especially now with the growth of AI and tech representing, since the 1990s, 2/3 of the S&P 500 gains, for example, is that there have been made some similarities recently between the dot-com collapse in the 2000s with the AI sort of era in terms of the overall macroeconomics. So in terms of robust wage growth, full employment, technological advancements, people are a bit worried that perhaps some of these tech sectors are so big and there's actually not really a need for some of them. Some of these things are factored into the share prices. Tesla's a ridiculous price to earnings ratio. It was even higher at one
Although
point.
it's 15% down today.
Although it's 15% down today, but it's coming to your point, Juan, around how is it possible? It's the trickle effect of exactly this point of, well, if you're going to invest in the economy, but you've got 4% unemployment, but you've got all of this going on and similarities to, previous bubbles, and at the same time having a tariffs war, I can understand why an investor, including myself, might feel a bit uneasy with just dumping money into the stock market right now,
Yeah.
right?
Especially when you have a president that is saying, yeah, I don't look at the stock market. It'll go down. I don't care. We're going to be rich because we're going to earn all of our money through tariffs. I think I really think he really believes that tariffs is going to be the main or one of the main sources of income for the US government. And it may be so, but then that's why I said it's going to be an experiment to see how that trickles down to your day-to-day population, really. And then on this point around, no, go for it.
I was going to say, I think personally, I think it could be because they have such a strong economic position. They have very strong bargaining power. But that's my personal opinion. It could also be that it has the opposite effect but I find that quite hard to believe. I can't imagine the world just boycotting the US, for example.
Well, yeah, I mean, in the end, it's I'm not sure if this is the same translation of the Spanish, the Spanish expression of the rule of the strongest, but it really feels like it's the rule of the strongest here, and it just
Yeah.
turns out that it's the US, and everyone else really looked at the US as an unequivocal ally that was always going to be there, and like this policing role of the world, and now it just turns out that, hey, maybe not. And to be honest, rightfully so. And it is actually good for the rest of the world, especially Europe, for us to just wake up over here, that the US may not always be there for us. But I did want to go back to your point around spending and the reinvestment in the economy being a good thing. So I undeniably, I think that is correct. However, as you correctly pointed out, that only works when you have very strong controls and almost accountability at the government level of how do you spend your money, what are you getting out of your money, why are you spending that money in the first place. And I think that is the reason why now Doge is focusing on consulting firms. I mean, all of these consulting firms that are earning billions and billions of dollars. I was just reading here online. I think it was something like Deloitte made $3.3 billion off of the government last year. I think Booz Allen Hamilton made over $5 billion last year. The majority of the revenues coming from the government and government contracts. And I think that's just a consequence of the fact that, like you pointed out, as opposed to companies where you have this thing called zero-based budgeting, where instead of just budgeting your next year, in terms of when we say budgeting, we mean when a company needs to decide where to allocate their costs and where they are going to spend their money based on the forecast of what they are going to earn already in the next year. Instead of doing that based on, okay, what did we spend last year? Oh, we probably need to spend the same or even more. And I'm the manager, and last year I had, I don't know, 1 million to spend over here, and so this year I built a business case of why I need 1.2 million this year. When really what needs to happen is you need to think from first principles and say, why are we even doing this activity? Is it bringing any value? Okay, we had to do it last year. Do we still have to do it? Right? What was the return on investment last year? Did it bring a positive return on investment? Do we need to keep doing it, or did it prove that actually we're losing money with this initiative, for example? And that's something that just it's tough for companies to do. No wonder the government. And actually, it's something that I see very frequently, and I'm seeing with my current clients. So, as Dan said, I'm a management consultant, and I'm currently working with a client that sells software to primarily the UK government. And it's crazy, some of the stories that you hear where some of the problems that they're having are around having high risk of churn from clients that are paying a fortune, but just haven't even taken the product out of the bag. Like, people are just not using the seats that they're paying for. And they're paying for these seats on an annualized basis. So it's recurring revenue for the company. And for them, it's like, okay, great. I mean, we would prefer that you got the value from the product and that you use the features, because then it would actually mean that it's stickier to you, and so lower risk of churn for us. But the reality is that with that, you get to see that, oh, actually, the government is paying for this on an annualized basis, and no one seems to have control. Like, the fact that you can have 30,000 licenses of a software product that you're spending hundreds of thousands per year on, and you're just not using them, is bonkers. It's like completely nuts. But it just happens. And if it happens at a smaller scale with my client, I can't even imagine how it happens at a larger scale with even bigger software providers and all of these consulting firms that probably also have recurring services that they run every that they run every year.
Yeah, no, I definitely agree, Juan, and I think it is a very fair point. I think, I like to draw analogies or similarities to marketing, really. In terms of the marketing return of a product, you sell product A and you do 20 different activities all at once. It's very difficult to isolate one of those activities to the return you got in terms of your short and long-term business, right? Because especially there's so many market dynamics at play, competition and everything. But, a similar thing applies to governments in terms of it's really hard for them to be able to say this, me building this electrical line delivered X million in GDP for our economy, because it's not just the electrical line, it's the plumbing, it's the healthcare, it's the transport, it's the construction, real estate, everything that goes into building an economy. It's much more a complex ecosystem, I would say. And that makes that job very, very difficult for a government to be able to clarify and demonstrate where their investments are worthwhile and not. And I think to a large extent, then it becomes a sort of, best estimate of the compound effect of everything. And the way they measure success isn't financial. That's also a big difference, which is they care about boosting livelihoods and societal relationships and value for money, which means that over the next 100 years, this is somehow going to give value, which isn't based on a net present value discounted cash flow or a, sort of more financial structured approach. It's much more, I guess, open
Yeah.
to interpretation, and that creates some of that complexity.
Yeah, there's not a structured business case around it because it's
No,
not a business. No,
no,
I
no.
get that point. Should we shift the conversation now to technology a little bit? Because in the midst of all of this market turmoil, Apple is actually down, big time, actually, 5%. I just checked the share price, so 5% in down in the last 5 days, and it actually is a bit of an isolated case. Actually, down because it's struggling to release AI features, as they delayed the release of Apple Intelligence features set to make Siri much smarter. Right, that's what they presented for their new iPhone models. They're now saying that it'll take, and I quote, longer than we thought, as rumors arise about Apple shifting from the integration of ChatGPT to Google Gemini as the base model to run their new Siri. So that is happening as well. I saw online that there was an update, and some tech geek got into the back end of the update code and saw that there was an API call for Google Gemini as well as for ChatGPT. So where we thought that ChatGPT had announced or both Apple and OpenAI had announced that ChatGPT would be the base model for Apple Intelligence. Now it doesn't even seem that clear anymore. And the reality is that, Dan, for me, Apple has been going sideways for a while now. You can really feel that you don't have a founder in-house, such an entrepreneur as Steve Jobs was. Um, so you have very weak growth in iPhone sales. So that's what has really made the company go sideways. And I don't know, Dan. I mean, back when we had the releases of iPhone every year be even more spectacular than the year before, where literally every upgrade of the iPhone seemed like just a new technology of its own. We just don't feel that anymore. I mean, I'm on the iPhone 13. I don't need, and I just don't feel the need to upgrade to whatever the iPhone is now. I think we're on iPhone 16, and I really think that Apple needs a proper breakthrough to convince users to upgrade to the newer versions of the iPhone. And it's so obvious that an AI powered Siri, or whatever they're calling now Apple Intelligence, could be that game changer. But it is just so obvious that they need to make Siri agentic as soon as possible. It just make something so that I can just tell Siri, yeah, reply to John in this tone and say that we can schedule a meeting for tomorrow at 10. Reply to the context, make the email formal and all of that, and schedule the meeting already and put it up on my calendar. It seems like something that is super easy to do, and for some reason Apple are just lagging behind. Like things like, yeah, book me a flight. I don't want to go through all of the steps to book the flight. Just book the flight, or give me options. Give me 3 options within this range on these dates, and then I'll just tell you which one I prefer, and then just book it. Book it for me. It just seems so
Yeah.
easy, and yet we don't have it. It's insane.
Yeah, no, I I think one of the things to bear in mind is, when Steve Jobs was in the company was going through a huge growth stage. So market penetration wasn't super high, and then it reached actually 110% of their market. So they managed to so they made some assumptions around what people can afford and everything, and Apple became a sort of religion. So people, even if based on their wealth, weren't able to afford Apple, they would do everything possible to be able to have an Apple iPhone, for example, pay it off over a period of 3 years or something like that, which isn't necessarily what is, let's say, financially advised in terms of
Best
buying a
practice.
phone. Best practice, as a little disclaimer there. Um, and then after that, yes, Steve Jobs, passed away, but there was a problem there because they were stuck. All they'd done was build and build and improve and improve. And as you know, after 6 seasons of the same episode of the same series you're watching on Netflix, it gets a bit repetitive. So they didn't know what else to do. So they tried to shift towards a cloud model and focusing on the ecosystem itself. So that's why, for example, now you have to pay for your storage, or there was a focus on being able to integrate all of your devices. So, easily jumping between let's say if you've got AirPods on, I've noticed it's very well done in that sense, but it's a small win. It's not a big, big breakthrough that,
I
you're
mean,
listening to music on your phone, then you open,
AirPods
yeah.
themselves were quite big at the time, right? And they were done under
Yeah,
Tim Cook, right?
yeah, they were. I meant more as a user experience. Like you can jump between devices and the AirPods will follow those devices.
Yeah, yeah, sure.
That's pretty amazing. All of that sort of thing was great. I think where they went a little wrong was instead they started focusing on this ecosystem sort of approach, but then they didn't really follow it through. So it would make a lot of sense if you built some crazy ecosystem around Apple Life, where you have everything connected lights and all your home devices, a sort of Alexa sort of setup, but they seem to have gotten a bit lost and stuck in the middle. And you're right, it's a shame because it's a great company with some great products, and if they could take that level of engineering and quality of product with the same culture and mindset as they had under Steve Jobs and Tim Cook to really drive some really cool things. I think just now, right, if I think about it, why are they not focusing on office spaces? How cool would it be to have some sort of all-in-one Apple ecosystem product sort of, yes, the AI is an amazing component that would revolutionize every single one of their products. What about wearable devices? Rather they kind of went quiet after they're launching their VR.
But yeah,
Why not
that
take
was a
that
massive
further?
no-go. Yeah.
Yeah,
I don't
it
know
was
why
a
they did
massive
that.
no-go. No, I think
It
it was.
was
I think they were trying to showcase that they were pioneering with tech, and they got pressure from Meta delivering on that sort of side of things. But yeah, you got to know
I
your
yeah.
market a bit better.
Well, I just think yeah.
But I don't think it's
I don't know.
yeah. I wouldn't say it's the end of the world, right? I mean, think about Nintendo, right? They created the Nintendo Wii, then the Nintendo and the Nintendo DS, which were absolutely great consoles. The Nintendo U was an abysmally shocking experience. And then the Nintendo Switch was the best of everything. So if they could take a page out of Nintendo's books, they'll be doing just great in 2, 3 years' time. But in the meantime, it's a lot of work still to be done.
Yeah, the whole VR thing. I just I just find that it's like with the quantum computing analogy that we were describing last week. Uh, Something fundamentally needs to change because I just don't. I just think that currently the idea, and you can really hone the development and the execution and make a great product. I don't doubt that the Vision Pro is a great product, and it probably has a ton of features and they're really nicely done. But when the idea is not there, then the whole house of cards just falls down, right? And I think that something fundamentally needs to change on the VR headset thing because it seems dumb. Like you're not going to wear this super heavy thing like these goggles that just are in your head and you're completely isolated from the world and what are like we have screens like why do I even need that? Like okay, I can see why you would do that for 1 hour a day, maybe. To play a video game, maybe. But is that the use case? Um, I find something like the Google Glass, so maybe not a great example, much more fitting. I don't know. Um, in any case, I mean, it does seem like in the shorter term, let's say, AI seems like the absolute potential game changer for Apple, where if they really nail that, and if I really can take my phone to the next level, where it can start to do stuff for me, and this is this is where we're moving towards, and I'll talk about China's autonomous AI agent Manus or Manus. I don't know how you pronounce it. So basically, China essentially just leapfrogged Silicon Valley in AI with the launch of this new agentic form of AI called Manus. And they're calling it the world's first autonomous AI agent. So the difference here is that unlike your ChatGPTs and your Geminis of the world, which require you to give it a prompt, this system Manus is fully independent and it just can make decisions and take actions, essentially functioning like a self-directed digital worker, right? So that's where we're going. And it builds on the momentum of DeepSeek. Then I actually went a bit deeper, and in reality, they don't have a base model or anything like that. That they're actually they seem to be using Claude 3.7 Sonnet, so the model by Anthropic, and just they hooked that up to 30 other tools, and they showed this cool video of the tool with 120 screens open, so phone screens open on one bigger screen. You could see the agent just doing multi-task, so many tasks at the same time. And then at the same time as this happened, there were rumors of OpenAI potentially charging up to $20,000 per month for their specialized AI agents. So according to a report, OpenAI is intending to launch several agent products tailored for different applications. And I read there was one, I think maybe it was like a consumer one that was going to be priced around 1K per month. And that could do just like run as your EA, essentially. They were going to have other ones as well that you could incorporate to your business. Again, like in the $1,000 to $5,000 per month range. They were going to have a developer agent that could just act as a member of the team and just be the developer for you. And that was going to be priced at around $10,000 per month. And then they announced this one, the $20,000 one, was going to be supporting PhD level research. And it just indicates the sheer amount of money that that OpenAI needs at the moment. The company losing roughly $5 billion last year. So maybe the question to you, Dan, how far do you think we are from seeing for the first fully autonomous AI agents that, I can have my own AI agent and you, Dan, can have your own AI agent that can just do all of the tasks that you don't want to do really, but autonomously. And ideally it would be on your phone. I just think it's such such low hanging fruit. I don't know where like Apple is asleep at the wheel, really.
No, I mean, I'm super excited for that. The first thing I did when I saw Manus was I enrolled on their waiting list to use it. So I'll keep you posted if I get access.
Really?
Um, yeah, I did. First thing I did. I saw the post on like Friday, jumped on the website, put in my email address, like yeah, we'll see.
Damn.
It could be
Okay.
that I don't get anywhere because I don't represent the business, or I wasn't going to in that case. But yeah, it looked super cool. To me, from the demo, it looks like we're there in terms of my definition of it, because I think that's also part of it. Like, one thing is, hey, can you please respond to these emails? Another thing is, can you please make me an app? Another thing is, please do my entire quant trading strategy for a hedge fund, specializing in, whatever, blah, 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 arbitrage. So I think in terms of our more basic needs, Juan, I would say we're almost there, and I'd be excited to see what Manos exactly looks like. I wouldn't give it more than a year for it to be really a big thing. The fact that, there's been a huge surge in the search term for AI agents over the last months tells you what people are expecting, tells you what the markets are expecting. It tells you where we're almost there as well. So,
Yeah.
um,
Well,
yeah,
these
I
companies
think
are
if
just
anything,
creating. their own markets, right? I mean, they were the ones that started to broadcast that they were going
Yeah.
to work on AI agents, and so they just set the expectation for everyone else to just expect AI agents. I mean, it just makes sense, right? It's the natural evolution of this technology.
Yeah, exactly. And, to become a market leader, the best thing to do is create new market categories in terms of the product or technology you're developing. So if you become the world leader in AI developers, agents, and the world leader in AI executive assistants, then you're going to be very well placed for the next 20, 30 years, at least, I would say. On the flip side, this technology has been going at an unprecedented rate. Coming back to your point on the start of the episode, every week there's something new on this.
Yeah.
It was a few weeks ago where DeepSeek was announced, right? And we went and jumped into that. We've had 7 episodes and we've had some major discoveries in the AI and technology fields in 8, 9 weeks, right? Over that time period. That's mind-boggling to think about. That's in terms of human history and the developments we've had in terms of technology advancements as a Homo sapien race. This is an unprecedented level of change and shifts, and it's super exciting and probably one of the coolest things about being part of our generation is we get to see both the before and after of that massive shift in technology. It's going to be super cool.
Absolutely. Yeah, no, no, that's well said. I mean, I think in 10 years from now, we'll look back and we'll say, ChatGPT. Oh yeah, you remember ChatGPT? What that was like? It sucked. And there we were just thinking how awesome it was, and now 10 years later we see it and we just think that it sucked.
Who
At the same
knows? Who
time,
knows, Juan?
yeah, yeah, who knows? At the same time, I think for these like this company Manus or whatever it is, they're essentially what they're doing is just they're taking someone else's model and just applying their own tools on top. So it just tells you really that there was something that these base model companies hadn't really pieced together. And so I really think that in 2 3 months they will really figure it out and be able to do it themselves, because why do you need this third party? I mean, that's the next obvious evolution of the technology anyway. So I do think that this technology is very, very close to us now. We didn't talk about,
Yeah, I mean, I
yeah,
mean,
go for it.
just one last point on there. I think that's a fair point. On the flip side, right? During the gold rush, the people who became the first millionaires, were the ones who sold the shovels, not the ones looking for gold. And if you are, I mean, these people are extremely smart, hard workers. They've thought these things through. They're very aware of the AI agent potential economy and the size that has. If I was them, I think a very smart strategy would be first, like they've done, get it viral, get everybody using it, then make it super easy for people to build agents on the base technology, and then charge API pulls. And then very simply, you only have one product to focus on. So you have a super simple business, but you can charge huge amounts for those businesses. And people can build it and personalize it how they see fit.
So I think so. It's a very interesting point, and I actually think that your logic is correct. My only challenge is that every day we see the path to commoditization of the base models. So it does, in the end, seem like these models will end up being commodities. So more and more, it's starting to become evident that the value will be created at the application layer, actually. So it is. I see where you're coming from, and at the same time, it is a big risk for those companies to bet on the foundational layer technology only if it is going to become commoditized. Because, like, for example, at the moment, the cost of a ChatGPT query is all in all close to zero, but it is not zero. And if you compare it to the cost of a query on Google search, it is quite significant. So you do have that flip side of, yeah, Google search, for example. In the end, Google, the whole company, created the value on the application of their base technology that they commoditized and offer for free. And we're seeing that with open source models as well, right? So yeah, it's would be my only challenge, and I think that these companies, I mean,
No, that's
they're
fair.
smart folks and they'll figure it out. So that's
Yeah.
why I think
Yeah,
that
no,
we're
definitely.
close to the technology being a reality. Yeah, I was going to say, Dan, we didn't talk about European defense stocks. So we were talking about the market being down, but it does seem like it's golden age for a few bunch of stocks.
Yeah, absolutely. So, I mean, one of the things that happens is, well, at the end of the day, people tend to not just hold on to cash when they're pulling money out of the markets because effectively that means you're not very secure in that economy or the general economy, and therefore you're expecting inflation. So holding cash means that you're just going to lose effectively real money. So people tend to put it in gold or other asset classes. But in this case, we actually saw a very significant shift into European stocks and a huge growth in European stocks across the board. But it was mainly driven by the growth in defense stocks, and that's because of the political tensions, right? So we also saw a huge amount of increase in defense budget from countries like Germany. Let me just quickly show my screen for a second.
Damn. Okay.
Be very quick. Just to show you
I
just
got,
the impact.
I gave you the offhand comment, and you're taking the screen and all. Great.
So, so basically, one of the leading defense companies in Europe is called Rheinmetall, and it pretty much does everything. It does a bit of aerospace, tanks, missiles, guns. It basically supplies like 60-70% of the German military. And you can see what happened with while the US stocks were plummeting. It's been going through the roof. The
Oh my
price
God. So that's the 5 year.
of this
It's
stock.
up. So it's up
That's
53% in the past month.
in
That's insane.
yeah. So a bit down
It's down in the past
on
5 days.
yeah, but you know, I mean, 5 days. It's not much.
Yeah, no, no,
I mean,
I know.
I think
Damn.
bearing in mind that it grew by 120% in the last 6 months, it's it tells you that the political volatility is rising fast, and then people are putting
Well,
more
yeah,
money
6 months
into
is the
their
one that is
defense
interesting, right?
stocks.
Because that's when Trump got elected, essentially. So all of that
Yeah,
growth
yeah,
is the
exactly.
Trump pump.
The Trump pump, exactly. People being like, "Oh, not sure about Trump. I'm not sure if this has anything to do with Trump being elected. That big jump here, but
Yeah, I think so.
yeah, I think that puts things in perspective. So it's it's quite it's quite interesting to visualize. I find to see these things in real
Yeah,
life.
of course.
I don't think it's a good thing, by the way. Personally, I wouldn't I try to not put money into tank manufacturers as a sort of general ethos about life. But at the same time, for those who are investing, they're doing great. It's going great. Yeah,
Yeah.
they're happy.
It's a yeah. Well, it's a tough one, right? I mean, that's such a European thing to say. I'm also European, by the way, but no, but
Classic.
so like it is. I I understand where you're coming from, and in an ideal world, no one needs to invest in tanks, but at the same time, even though you wish that you never would have to use your tanks, if your enemies
Yeah,
are investing in tanks, then you better build some tanks to defend against your enemies, right? So, and in those cases, I do think that it is legit to just invest in tank manufacturing or any in industrial military equipment companies because, yeah, we do need to protect ourselves. I mean, lesson number one from Trump: Europe, we need to protect ourselves. No one's going to protect us if we
yeah,
don't protect
yeah,
ourselves.
yeah. I mean, you hit it on the nail there, right? That's why it's called the defense industry and not the attack industry. All right.
Yeah, depending on the
Everybody's trying to
country, I guess.
protect themselves from everyone else. Yeah, I guess so. And yeah, exactly. And despite what the media might have you believe, conspiracy theories
Yeah.
of who
Okay,
attacks who. Yeah.
we're starting to see the effect of 1 hour of podcast close to midnight now on a Monday. So I think we can call it a day. It was a fantastic conversation, actually. I really enjoyed it. Hope everyone listening also enjoyed it. Again, we really only do this because we enjoy having these conversations. And actually, Dan, I mean, just like for me, it's great to have these conversations because it just forces me to be so much more informed about the world. And I genuinely learn a lot every time that we film one of these. So
Same.
yeah, I hope you feel the same. I know you do. But yeah, so for everyone listening, we hope that you learned something today. Listening to us just talk about stuff on a Monday night. And yeah, I guess we'll see you next time.
Sounds good. On that note, Juan, I think it's time for me to get to bed. Need to get up early. I'm gonna go swimming tomorrow morning. It's gonna be
Nice.
a hard
Yeah.
swim in the, but yeah.
It's going to be a hard push for me at the office tomorrow. So yeah, bye
Good
everyone.
luck. Bye.